So we're going to talk today about the bull run. When are we going to exit? Good question, right? Hi everyone, welcome to the channel. If you're new, make sure you have subscribed, hit that bell button and leave a like. I feel a little bit weird, not going to lie, in terms of my voice. Had a cold. I'm not coughing and spluttering today, so hopefully I get through this video okay. I've not talked at length, so could be fun. I may die at the end. So the ultimate question is simple. Bull runs. Everyone is doing tweets about the bull market. Everyone is talking about the bull market. Everyone's talking about a potential ETF. Yeah, cool. However, we're not talking about the exit yet, are we? So let's make some pre-plans. We're going to make a plan, and I'm going to explain a bit of my plan so you can kind of get a gist of how I work, especially if you're new to this channel. I'm very, very controlled, measured, pretty boring. I do apologize. I don't do weird thumbnails where I'm like this, trying to tell you to buy Bitcoin because it's the best thing in the world. I do agree with that sentiment, but I'm not going to get you wrecked. Now, let's talk about it. There's going to be a little few nugget bombs in this video, right? And I'm going to be perfectly honest with you. It's all psychological. The reason why that is important is because profit is king. We're going to talk about how you can survive in this market. Simple as that. So, if you like that sort of thing, please leave a like, because it's a lot of effort, it's a lot of knowledge, and people like BitBoy get a lot of fans, which I do respect his brand, but sometimes his content, it's going to get people wrecked, and we've seen that before with other people in 2017, 2018. Not to twine, but it's kind of what happens, right? New people come into the market, they get very, very greedy, they keep buying, even when money's been taken off the table. We're going down, 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 and people are still buying, expecting it to carry on going up. Throughout this video, I'm literally going to show you methodology in terms of when you should be buying into the market, when you shouldn't be. It's very, very simple. It's simple. It's just rules, right? Follow them. So rule number one is simple. The worst pain in the market is always, in my opinion, leaving money on the table. So imagine yourself, right? We're going to use a very, very crypto style analogy here. Imagine walking up to a Lamborghini garage and you walk up to it and the shutters are gradually opening. That is your portfolio going up. And then at the end, it'll stop, right? And then you can see a brand new Lamborghini. Now, I would never buy a Lamborghini. One, it'll get nicked. Two, it'll probably get set on fire where I live. You can see the picture, right? But it's just an analogy. When you've got that, realize like, oh, I can go and buy a Lamborghini. Cool, happy days. I wouldn't expect you to do that, but I'm just saying there's a point. Now, when people get too greedy, something will happen. The shutter will gradually go down. That is your portfolio just bursting again, literally going down. It's happened before. I've literally witnessed it. I've witnessed losing six figures in one day, literally in 3 hours, because I was too greedy and my portfolio just melted. It sometimes is more significant than that, but in terms of 2017, 2018, that was brand new to me. That was ridiculous. Putting $2,000 literally in the market over a period of a year, right, literally, and it going up to like, you've all seen the story if you watched the video, going from there, then just where did that go, right? It's ridiculous, right? So losing money that was already there, not being able to grab it, is the worst feeling in the world. Number two, the mentality of just being a hodler is absolutely stupid in a bull market. It really, really is, right? The term holding on for dear life is not about never taking profit. It's about holding when the shit is getting really shit, right? So when it's getting horrendous. Where does it come into the fact that I'll just never sell until I'm 55? Doesn't make sense. Honestly, the quicker you learn how to take some money into unrealized into realized, the more you'll learn, the more you'll grow as well. Literally, to have is to grow. That's my mentality, right? If you got it as realized profit, you can then utilize that somewhere else, right? Cardano, for example, bought it at 3 cents. You probably are seeing that. I sold at $1.60. People laughed at me because it went higher. But what they didn't know is I bought 3 other assets with that as profit, and they've all literally multiplied my portfolio massively versus what it would have been if I left it in Cardano. It's ridiculous how people think. You need to have it to grow it. You need to do something, right? Buying Bitcoin at like $1,000 expecting to become a millionaire doesn't really work. So what did I do? Well, I literally moved my money around. I literally put, right, you've probably seen the story, $50 into Ethereum one day. It went crazy, right? It went crazy. I bought $50 worth of Ethereum, and yeah, it was like maybe about $13 back then. That was my first ever move from Bitcoin into an altcoin, was $50, right? Then I put a little bit more in, right? As you get more comfortable, more familiar with it. Back then, I didn't know what was going to happen with my life. It wasn't going to just change, was it? Oh, it did though, didn't it? Crazy. But when you are learning, when you are in this bubble, and the crypto bubble is big, you need to remember to take profit. It is still a bubble, right? Remember, NFTs have gone up so much. You know, all these assets have gone up significantly. It will get bigger. A bubble is an interesting proposition. Why? You don't know how big they're going to get. So this is why you should always take profit on the way up, which is probably one of the rules you should have as well. So what I'm going to do, I'm going to go over to the screen. I'm going to show you certain things and certain situations you can look at that may be a factor in the decision making. Now, one thing before I move on to that screen, rule number 4 is very, very simple, right? Making your own decisions. Most people know this. I kick off a little bit when people ask me about, are you still holding this coin? Are you still doing this with that? Doesn't matter what I do, because I don't want to influence your decision. I'm not a financial advisor, right? I'm just a content creator, but I specifically go around education and teaching you how to do it yourself, right? Which is why I've made a Patreon. This is why I've had a company for 3 years teaching you as accredited education. Top standard stuff, right? However, me telling you to do something doesn't really work, because you will not react in the same way I do. My risk appetite is different. My balance is different. My sentiment is different. My understanding is probably different. So me taking profit early, you probably go, what? But this influencer's told me this. Doesn't matter. What I've made in that transaction could be way more than what you probably ever think, because my bags are bigger, right? That's the point. If you're new in the space, you're never going to have the amount that I will put into a market, because risk appetite. It's all based on percentages. So once you build up to that point, you'll probably understand it. You don't want to be leaving loads of money on the table, because if you lose it, it's not really wise, is it? Yes, you can probably let it run a little bit more with different risk appetite. However, if you're going onto YouTube and trying to get rich very, very quickly, you're probably going to lose out, because what you've been actually belt fed are paid promotional coins. Anyways, green screen. So I'm back. Hiya. Now, on the screen, total 2 market cap, or even the total market cap, sorry. This is one situation you can look at. Now, as you can see, I've got a little plane here. On Patreon, I put a little analysis not too long ago saying we're going to be coming very, very close to this. And what does this mean? Well, to the average mere mortal, this is the all-time high of the entire market. The entire market capitalization. Now, it's a bit of a fabrication kind of element to this, because new coins are created all the time, new coins are released, it increases this, right? Obviously. However, this is the thing that people have forgotten about. There's a lot of coins in the top 20 that have not even got close to their all-time high yet. There's only a couple, right? You've still got Polkadot, you've still got Cardano, you've still got Bitcoin, you've still got Ethereum. There's some big ones. You got XRP. Yeah, we're going down a whole list here. There's only about 4, I think, that have actually breached all-time high in that top 20. So when we start thinking, well, fuck me, where's that going to go? Well, it's going to probably go up, which is probably where FOMO is going to kick in, right? We're going to see Bloomberg, CNBC talk about, oh, look at the FOMO rating. Boom. New people are going to come into the market. It's going to be pretty savage. Now, let's talk about it. The dominance chart of Bitcoin, I feel we're going to go high. This is like, let's talk about profit taking. If this happens and we go to that point and we melt, boom, you're going to ride it, and it'll be quick. It'll be about 3-4 weeks that it could potentially drop, like the last bull market, right? Last bull market, by the way, and I've mentioned this before in previous videos, we did this. We went from 71% all the way down to 35 or whatever it was. It was ridiculous. If you see that and you see your portfolio just growing and growing and growing, you need to start taking stuff off the table, because it will snap back. It will. And you all know the trick, right? Go to the total market cap, or even the total 2 market cap, right? Whenever we get too far away from the moving average 21, which is personally what I use, we always snap back. And you can see that here. We went too far, we snapped. Going like this, we're still continuing the trend. The trend is still bullish. But if we are looking at potential snapback points, we've got to look long term. And obviously this will follow it. So even if we go to 1.7 trillion market cap, excluding BTC, Dogecoin's gone on a run, happy days. But when we look at the overall with Bitcoin itself, we're still in a nice little trend, right? We're still doing very well. But Bitcoin's been doing better than most at the moment, right? So we may be looking at 2.8 trillion and maybe 3.27. So this is where the profit taking kind of comes a bit more of a metric. There's nothing wrong with taking 10% out, 20% out of the market. If you feel it's going certain levels, always grab and look to put money into stable currency. Even if you want to use a yield, you can utilize other systems out there that are working for you to make your money work for you. Now, one of them I mentioned before is BlockFi, right? If you check out BlockFi, there's a link below, right? You can utilize that, put some stable currencies in that, earn 8.5% and sit on it, right? There's nothing wrong with putting profit in there and just sitting on it, literally sitting on it. Because if the market goes to that 3.27 trillion, for example, as one of the levels, cool, it might retrace and you might go, oh man. Well, there's nothing wrong with you moving it around in BlockFi into Bitcoin or into Ethereum to buy the dip and then carry on earning as well. There's all kinds of ways to do it. So I recommend you check that out, right? But the one thing I do need to talk about is the obvious. Why should you take profit? Well, I've already mentioned it at the start of this video. Having money is the best thing because you could realistically change your entire life. Because if this is a bull market, and let's just say it does last for another 4 months, 5 months, right? And you've been taking little bits out here and there and you've been building a stash of stable currency. Well, when that market does turn, like properly turn and goes into a bear market again, and if that bear market lasts for 2 years, and let's just say, for example, right, I know people are talking about Ethereum going to like $13,000, right, for example, right? What if $13,000 does happen, but what about if the next point is $1,000 again, right? And I know you're probably thinking, what is wrong with you? But realistically, right, if we're looking at markets here, and let's just go from 13,000 bucks here, and let's just talk about us going all the way back down to this point. What is, you know, in the last bull market, a lot of assets went down 89 to 96%, right? And I know this is all just what if, right? But I'm just giving you a warning. You'd be really annoyed, really pissed off that A, you left it in Ethereum. Yeah, you can earn a bit of a yield on it, fair enough, or a staking. But would you not want to have something to then put back low again and then just build your bags? Because we are going to get to a point where the top 10 will be a top 10 for a long time and it will just stay, even the top 30, let's just be honest here, where you can be able to go, well, Polkadot's good, Ethereum's all right. Yeah, it's a bit expensive, but it's all right. It's going to survive. You know, the likes of Solana's all right. Even, you know, likes of Luna, for example. The stable currencies are pretty, you know, established essentially nowadays. You've got other assets out there that you can probably put your money into, like BNB, Cardano. You know, you'd be pissed off. And I think you will be. And I know I'm looking at this as hindsight right now. And I know there will be a capital in hindsight. But you've got to think of the hindsight as well. You've got to think, well, if we get to a certain point and I'm going to take profit, I want to do something with it. Well, step one is make it work for you. While the prices are melting and everyone's going and getting really annoyed and becoming really salty in your DMs and whatnot, just sit and chill out. That's what I'm going to be doing. That's literally what I'm going to be doing. And then when it goes to a certain point where it is quite low, I'll be like, right, boom. I'll buy some Ethereum, please. Okay, cool. Happy days. Thank you. How much do you want? Well, that much will do. Thank you. Cool. Yeah. Say with Polkadot. What's wrong with that? So let's talk about Polkadot. What if Polkadot, and I mentioned this before in tweets, right? I've already got the targets laid up, right? Sneaky, sneaky. But let's just say it goes to 140 bucks, right? Let's just say, quite a nice number. What about if it does correct back down to these levels again? Let's just say it does an 85% correction. Well, what am I going to do with that? You're wondering. Well, guess what? Money will be going back into Polkadot. Why? Because I can stake it. Cool. I can make passive income. Cool. I can make a living off that. Cool. This is what you need to do. This is why this bull run for some people is going to be the most important bull run of your life. It really is. It's going to set you up. The last one set me up. It made me become financially free in terms of I could be able to quit my job and do this full time. Yes, it was a huge gamble and a risk. I was learning a lot as well back in those days. And you also didn't have passive income back in those. You didn't have DeFi. You couldn't just earn a yield, which was probably more remarkable realistically, right? But But the fact now that my year is all spent upon building wealth and passive income, this should be very, very, very important to you. So again, let's just refresh some things. Taking profit, it's all psychological. If you get into certain points where it's extensions and this kind of goes too far and you've made enough money, take a little bit out. I'm not saying just sell all your bags. I'm just saying take something out. Just put it somewhere and then gradually just keep going. Now, the one thing to look out, the big red flag in any market, look for a very obvious lower high, right? So if we go back in time here, look at Bitcoin as an example. If you see stuff like this where it fails, start maybe taking a little bit more just in case, because you do not want to be a part of it. Now, again, it's looking great in hindsight and the structure is looking brilliant so far. As you can see, I think we're going to 70k basically, right? But if you start looking at this, for example, here, and looking at the 3-day, for example, it hit a level and we melted down and below where we, the potential target points are. Now, again, hindsight's a beautiful thing. Capped in hindsight. I was taking profit there. I bought low. People really, people like went and slaughtered me, right? But it's the right thing to do. You got to look at that situation and think, well, we've broke the trend. When we break the trend, is a problem, especially when Bitcoin does it. Things melt. And when you look in conjunction with, well, what happened when that happened? Well, guess what happened at the total 2 chart? Vroom. Money went out of the market. Total 2 chart, there you go, different. Again, if you're looking at the dominance chart, what happened in that time period in May? Well, we bottomed out. Everything changed, but guess what we're doing? I think we're going to go up, and then I think we're going to melt. Personally, that's what I think. So, this is a long video, I do apologise, right? But I missed one yesterday. I do a bit of a bumper one today. A lot of nuggets in there. Seriously, if you're not taking something off the table when it goes to a certain point, the best catalyst is looking at your portfolio, looking at each individual asset and going, right, what is happening? What's coming? How much have I made? If you're not taking profit after like a 3, 4, 5, 10, 20x maybe, 20x definitely you should be looking at, hold on a minute. Let's just take my risk out of this one. Don't get greedy, right? People always laugh at you for taking profit, but you always have the last laugh at the end of it, because if you're the one that's growing continuously, if you're the one that is making money 2, 3, 4 years down the line because you've got the equity to do so, you could be set up for life. And when you start thinking this market is so quick, it is. 10x's, 20x's, 50x's, 100x's do not happen in the stock market. They happen here though. That's scary. Really, it is.